Hi, folks. Today I'm going to talk about a few lessons that I learned during my financial journey while working. Different people have different risk appetites and different goals. So, what worked for me may not be suitable for you. I just thought that these could be starting points for your financial journey as well to consider and see whether it is suitable and then move forward. As many of these stories start, I started my investments with LIC as well. I had worked for 2 years, and then my landlord's friend, who was an LIC agent, approached me. I laid out my grand plan that I was going to get married in a few years' time, and then I'd have kids after a few years after that, and they would go to college. So I needed LIC policies to support me during their college years and after. So I took about 14 LIC policies stretched across the time from when I thought they'd start college till when I retire. After many years of running those policies and paying the premiums for it, I realized that they were a terrible investment. I exited it. Not only did I miss out on the compounding that I would have gained for all those years, even on a basic product like fixed deposits, I also had to give up 20% of my principal amount. I only got back 80% of what I invested all these years. Since then, I'm a big believer in term life insurance. I think people should take a high coverage because the premiums are relatively lower and then avoid any other investment linked insurance products. Another investment I made was after about 10 years of working, I bought an under construction flat in Bangalore. At that time, I just moved out of Bangalore to Delhi and I identified a property back here and I bought it. It was under construction. When I came back in 2016, I realized that I had outgrown the size of the apartment. We didn't care too much for the area that it was located in, and we didn't like the way the construction had come about. So, my advice is that if you have a 10-year horizon, then buy a ready property because you can see the finished product, you know what the issues are and what the positives are. But an investment in a rental property may be complicated to not only manage but also to calculate. And if you're out of the state or out of the country, then the problems multiply exponentially. Either to rent this or to sell it becomes complicated. So be very careful with your real estate investments. I think regarding health insurance covers, we always were covered for all our procedures and hospitalizations by either my employer or by my wife's employers. But in 2011 end, I was in between jobs. I didn't have a cover, and that's when I realized how financially vulnerable I was. So I went and took a personal health insurance cover, which luckily has never been put to use. But I realized that we cannot depend on corporates for our health insurance cover. We need to have a backup personal health insurance cover as well. So, this I feel is very important. Coming to the hot topics of today's financial markets, mutual funds, stocks, and crypto. Yes, I have invested in all three. I did my first investments after about 5 years of working in mutual funds. I put small lump sum amount into equity linked saving scheme or tax saver funds, and then I did another one 3 years later, and then I started my SIPs much later after that. However, because I had invested in mutual funds, I could refer back to that data. I could see how it had performed. It was encouraging at that time. So I started my SIPs and then I started more investments, which have worked out very well for me. Regarding stock investments, I would say that I'm a very average investor. I now have curated a set of stocks which I'm comfortable investing in. I don't mind investing them from time to time when I see that the prices have dipped. However, I believe that stock investing requires a lot of time, research, and interest. Most people start off with great enthusiasm, but after about 6 months, the interest peters out and they are not keen to monitor the portfolio and they leave it there. And individual stocks are volatile, they can move down quickly. So, I would recommend that if you're starting investments in stocks, if you're keen to scratch that itch, start by investing in a few blue chip companies and then see if you continue the journey, else exit it and look out for mutual funds because you have somebody who's a professional who's managing the investment for you. Cryptocurrency, again, I invested when the market was going up, and then I stopped putting more money at the peak. And then the market went down. Plus, the Indian government was placing a lot of heat on crypto at that time. So I exited with a 50% loss. Post that, the markets have gone up again, the losses have been recovered, and it's showing a little more profit. But since I exited, I didn't get that benefit. However, just like I had invested in mutual funds, home loan, stocks, even the crypto investment was good because only when you put your money into products do you delve into the details, do you track it, and you understand a little more. So even now, I track crypto prices. I read a little bit here and there, but I'm not keen to invest more. Like if you give me articles on mutual funds, stocks, financial markets, I can keep reading it all day. But if you give me articles on cryptocurrency or talk to me about it, I don't have the knowledge and I don't want to enhance it too much as well. So I know that I'm not looking at cryptocurrency investments at this point of time. So, for anybody who has recently started their career or is a few years down the path of their career, they should start investing. You can always look at investing with small amounts in different products because that's when you really look at the details, you track it, you monitor it, and then you understand it better. However, it's also important to exit quickly if it doesn't suit your risk appetite and your goals. So I hope this video helps you in your financial journey. Do drop your comments. Thanks for watching.